Oil and natural gas almost trading flat and have started the week on a almost flat note. And most important is the oil trading near to the resistance at 77.2 and is still failing to breach past by. At the same time, net gas trying to retrace from the resistance level. So what to expect today? Which position you should take trading crude oil and natural gas? We will see with the help of charts and indicators. First, we'll look into oil, followed with net gas to watch till the end. Also, it will be a great motivation if you just press the like button before leaving the video and appreciate the efforts. And also, those who are new must share, subscribe, and comment. And yes, pressing the bell icon will keep you updated with the twice a day analysis. The next update will be released before the US session. Do watch that also. Let's start. And yes, you can remain updated by joining my free Telegram channel. The link is mentioned in the channel and video description. Now, let's have a look at the movement of oil on the hourly charts. First observation, see the first base created here on oil, next base created here, and now it is trading bullish since then. That is the first observation. Now, if you look at the hourly charts very clearly, the hourly candles are aligned and you can see this is also aligned. Now, the support is seen at 76.50 and hence this is the only sell entry which one can take today. Below 76.5, we can still expect it to get the support from, see, 76.2 levels, 75.8 levels. Very, very good support here. And then 75.5. So 76.2, 75.8 and 75.5 and then 75. These are four support levels, extremely important support levels. If and only if oil breaks below 75, you should treat this as bearish. That is the first observation. Now, if you look at the hourly chart, see 77.2. This is the resistance zone, long-term resistance zone. We'll see on the daily charts. You can see this line coming here on the hourly charts. This is getting derived from the daily charts, and this is a bearish channel in which it is trading, and it is definitely giving it a very good resistance. See, the stochastic is retraced here. The MACD is bearish. It is trying to converge a bit. RSI is almost flat. Coming to the 2-hour, on the 2-hour chart, similarly, support levels are seen till 75. We have seen that. With that, this is the bullish channel. On the upside, beyond 77.2, you can expect 76.8, 77.8, and then I will be looking forward to 78.4 and in fact $80 levels in this week itself. Stochastic has dropped. MACD is bearish, bullish, and trying to converge here. Now, see, one more point is first wave, second wave. So this wave could start here. So the bearish leg on this wave could start soon, and hence we have to be watchful. Now, also one more point is the divergence of the price from the 20 period moving average. You can see this sitting at 75.8 levels. This RSI almost flat here. Coming to the 3-hour chart, similar observation, we can see support is seen at 76.5. First bullish candle here. We can see a second bullish candle which might take the prices still towards 77.2 and in fact 77.6 levels, the top of the channel. Stochastic has dropped here. The MACD is in green. It is bullish. It is divergent and it is looking upwards. Good sign for oil. RSI looking upwards, indicating slight bullishness. Coming to the 4-hour charts. Now on the 4-hour chart, see one bullish candle, couple of retracement candles, and again resuming the upward journey. And if you look at the movement here, see 4 candles creating the base here. Then since then trading bullish, and it is looking upwards. So possibly once it stays above 77.2, you can buy again, but then expect 77.6 as the first resistance, 78, 78.4, and then beyond that, sky is the limit. On the upside, we are looking at $80 levels in this week itself. The stochastic has dropped a bit, and see the MACD here crossing over at the 0 levels and now trading with a divergence, trying to show a little bullishness. But if you look at the movement, see higher lows getting created here, higher highs getting created here. Oil here can continue with the upward move. RSI looking upwards, which is also a good sign. Coming to the daily, first let's have a look at the larger picture. See, oil has been trading in this bearish channel since long now. You can see multiple times we are seeing it reversing from the peak and on the downside getting the support from the bottom here. And also this time, if you look at it specifically, you can see it has created good enough base. Stronger the base, larger and taller the building, we can see almost, or we can expect almost, a V-shaped recovery here. A V-shaped recovery means 80 to 85 levels. Now see, it is looking forward to certainly a V-shaped recovery. Now, if you look at the daily charts, first of all, rise, retracement, and again looking upwards. So this is still a bullish sign on oil here. It is willing to continue on the with the bullish momentum. Next is the support it has formed is on the daily charts is at 74. So any retracement till towards 74, 73.8 is an opportunity to buy. Next, one important observation is the top of the channel. This is the median of the channel, and see the long term top of the channel is far above at 95 first of all. Also, now look at the moving averages here. These have crossed over here. This is the 20 and 50 period crossover. 20 and 100 crossover is here. I will wait for the 50 and 100 crossover, and then it will fall into a perfect bullish zone here. Now look at the daily charts here. See, the new candle on oil has started now, and now this is the previous candle could be a reversal candle. If it stays below 77.2, we can expect it to retrace. How far? We can expect 76.5, 76.2, 75.8. 75.8, very good support, 75.5 and 75. Now see why it may try to retrace. See, prices right now are divergent from the moving average. Also, it has formed a double top. So this is the level where one has to remain cautious. If it has to retrace, or if it is still bullish, it may try to retrace a bit. Hence, we have to be cautious here. Sell at 76.5 and buy at 77.2. On the downside till 74, 73.8, it will be a good opportunity for you to buy again for accumulate more. But till then, one has to remain cautious, because see, this has formed a double top on the daily charts, and it could try to retrace a little on the downside, achieve the moving averages before looking forward to up move. Stochastic back to overbought zone. MACD is still bullish. RSI almost flat. So considering this, buy at 77.2 and sell at 76.5. On the downside till 75, one has to remain extremely cautious. There are supports at 76.2, 75.8, 75.5 and 75. If it breaks 75, then further bearishness will prevail, and we may see it hitting 74 or 73.8 levels. On the upside, only bullishness. Once it stays above 78.4, you can expect we are going to hit 80, 82 zone very, very soon. Take your positions accordingly. Now let's have a look at natural gas. And before we look into gas, if you want to learn this art of trading, you should join my mentorship batch. 24th batch going to start on first week of August. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, you can be part of my Signals channel. Reach out to me for more details. Now look at gas on the hourly charts. First of all, look at gas's movement on the hourly charts. The bullish crossover here. Since then, we have seen a rise double top, and now it is trying to retrace. Only bearishness in gas is if it breaks below 2.6 and then specifically below 2.5 levels. This zone is where it is going to get the maximum support. Else it is still in the bullish channel. Now you can see the extreme divergence. First the price divergence of price from the moving average, and then the divergence of the moving average, and that is why we can see it converging and trying to trade with slight bearishness. One can try to initiate a sell entry if you see it trading below 2.68, but then 2.66, very good support. 2.65 or 64 levels, very, very good support till 2.6, you can say. So if you are taking a sell entry, you have to put a trailing stop loss. Remember, it has got very good support till 2.6 on the downside. Now if you look at stochastic is oversold here. MACD is extremely bearish. RSI is also looking downwards. This is also bearish sign. So once we have seen extreme bearishness, possibly a little retracement cannot be denied here. Same on the 2-hour chart, you can see sharp bearish candle. Since then trading bearish. The bottom of this is at around 2.66, 2.65 levels. And at that point we will see how it behaves. Stochastic oversold. MACD is extremely divergent, extremely bearish. It can continue with this momentum for a little while. Now see, first wave, second wave initiating here, and hence it could pull the prices little down. RSI looking downwards, and on the 3-hour chart, similar observation. However, one can see the bearishness getting diminished here on the 3-hour charts. Also, the prices were too much divergent from the moving average. It is trying to create a support here, and then the next support is at 2.6564 levels. Stochastic oversold. MACD crossing over for a sell here, trading with divergence and bearishness. It may continue. See, first wave, then second wave. Now it is willing to continue with the red side of this wave here. So possibly once it achieves this, we can see it reversing again. RSI looking downwards, and on the 4-hour chart, similar observation. Price is divergent here, moving average is crossing over here, support till 2.6 to 2.6, very important levels here. Also, if you look at the 4-hour charts, it is trying to drop a bit, but see, the drop should not be the sharper one, that then we should treat this is still as a retracement. You can see the base is created here. With that as base, net gas is trading bullish here. Stochastic oversold. MACD has crossed over at the top, trading with divergence. This may try to pull the prices little down. RSI looking down. Coming to the daily charts. Now on the daily chart, see a reversal sign. First red candle, we can observe second red candle, which might try to pull the prices till towards 2.65, 2.62, or in fact 2.6 levels. And hence you can sell here at 2.68, but then extremely cautiously and always trade with the stop loss at your entry price. Now what it is trying to do, you can see a reversal sign, then the rise, higher highs, 3 to 4 green candles. Now it will try to form 3 or couple of red candles before looking upwards. Stochastic overbought, trying to look down. MACD has crossed over on the daily chart. This is still bullish. It may continue with the divergence. Hence bullishness is still there. That is the only signal which is giving the bullish indication. RSI is flat. Considering this, you can buy here at 2.72 and sell at 2.68. Buying at 2.72, you can expect 2.76, 2.8, and if it breaks past 2.8, we are looking at $3 levels. Remember this fact. And on the downside, a little retracement till towards 2.586 zone, 2.6 zone can be expected, but it is still remain in the bullish zone till the time it remains about 2.5 or 2.4 levels. So a possible sell at 2.6 it can be taken. However, remember extremely good support exists. 2.65, 2.62, 2.58 levels. Take your positions accordingly. Trade with a stop loss, trade with a trailing stop loss. Join my mentorship batch, join my signals channel. Reach out to me for any of your trading or training queries. Thank you very much. Have a great profitable trading day ahead. And before leaving the video, do press the like button, do share, subscribe and comment, and stay tuned with the next update before the US session. Watch that update also. Thank you very much.